Our economic and data editor, Ed Conway, has been speaking to the bank's governor, Andrew Bailey.
I know it's very difficult for families. I think it's, understand that. We have raised rates by 0.5% today because we've obviously still got a very high level of inflation. I do see the signs that we're turning the corner, and that obviously is encouraging. But there's a long way to go, and there's some very big risks out there which could throw us back off course and cause inflation to be higher than we think. But we have very deliberately changed the language that we've used today. So we have been in recent times using language which really do say if the economy evolves as we think it is, I'm afraid there are going to be further rate rises. We have not used that language today, and that's important. We're going to take it, each game as it comes, as it were, and look at the evidence very closely as we do and see what we conclude from that for the path of inflation.
For people, who are looking, people who have mortgages, who are looking and seeing those rates going up and just trying to make their own plans, and they're worried that they're going to head up higher and higher and higher. Your message to them is maybe you don't need to be quite as panicky as you might have been.
I'm hoping that we will see, as we have done in recent months, much more stability in the interest rate curve off which mortgages are priced. And by the way, I know this is for new mortgagees rather than obviously people whose mortgages reset automatically. Actually, mortgage rates have come down over the last couple of months, and that's important. I was hoping back in November that they would, and we have seen evidence of that. But I realise that evidence is helpful, but there are a lot of people, of course, who don't immediately benefit from that.
You have your your finger on the pulse when it comes to inflation, when it comes to wage inflation, all of these pressures coming in, and you say that maybe we're now turning the corner on inflation. So that's a big deal. Does it not follow then that some of this pressure on public sector wages that the government has been trying to keep down, is that really still necessary given that we have turned that corner?
Well, I would say that the biggest risk we face to the pound going forward is both price and wage setting, by the way, because they're both important. Now, just picking those two up, on price setting by firms, I go around the country a lot. A lot of firms are now saying to me they are finding it more difficult to pass through increased costs. So we may see some alleviation on that front. Wage setting, certainly in the private sector, wage setting has overshot what we thought it would be. So we are concerned about that, and we do look at the whole economy. And that, what happens going forwards on wage setting will be very important, and we will be watching it very closely because that will be, I think, an important indicator of whether this very sharp downward path of inflation will happen.